Hello, hello, hello. Varda, Vardapa. Right. Yeah, yeah, Mohan. Right. So, what should be maintained? Number one, the books of accounts and the other relevant books and papers, the financial statements for the financial year. These are all the matters which should be maintained. So, what is meant by books of accounts? So, the receipts and expenditure, the purchases and sales, the assets and liabilities, and the cost accounting records for notified companies. So, this is the no definition of books of accounts which is given. Number one, the cash book. Number two, the purchases and the sales book. Number three, assets and liabilities records. Number four is the cost accounting records. Number two is the other relevant books and papers. Other relevant books and papers shall include the books of accounts, deeds, vouchers, writings, documents, minutes, and register. So, what shall come under this other books and papers? All the books of accounts, deeds, documents, writings, vouchers, no documents, all these things, minutes, and register is to be considered as other books and papers. And you should also maintain the financial statement. Financial statement, you know, financial statement, five matters are there: the balance sheet, the P&L, the cash flow statement, the statement of changes in equity, and the explanatory statement, the explanatory notes. However, cash flow is not required for a small company and one person company, a dormant company, and a startup private company. So, this requirement is not there for no small company, a startup company, a dormant company, startup na any startup, startup private company, and also to a no one person company, which is not required. Cash flow statement is not required. Only cash flow statement is not required for these companies. Other documents are required. Right. Now, what is financial year? Financial year is the normal financial year is April to 31st of March. But in the year of incorporation alone, it is from the date of incorporation till the 31st March of the next year. Which means if I'm going to incorporate the company in on, okay, say for example on 15/5/22, if I'm going to incorporate a company, then the date of incorporation is 15/5 till 31st of March 23. Suppose if I am going to incorporate the company on 15th of January 2023, then the date of incorporation with the first financial year will be from the date of incorporation till the next 31st of March, which means this will be up to 31/3/2024. So, which means whichever is the year of incorporation, that year till the next, the upcoming 31st of March. The next year, 31st of March. That is the first financial year. And can I follow a different financial year apart from this 1st April to 31st of March? That is also permissible, provided no your associate or subsidiary or holding company is situated outside India and they follow a different financial year. So by now you should have known about this concept called as consolidation. My dear friends, for the purpose of consolidation, my dear friends, for the purpose of consolidation, what will happen? No, the balance sheet of all the entities are to be clubbed together. The P&L of all the entities are to be clubbed together. Now, when the balance sheet and P&L of all these entities are to be clubbed together, when the balance sheet and P&L of all these entities are to be clubbed together, then what will happen? They should be on uniform footing. So therefore, you can make an application to NCLT saying that, sir, my associate. So no ego problem here. Associate is his junior, no, ask him to change the financial year. Subsidiary is your junior, no, ask him to change the financial year. Nothing like that. So I can change my financial year as per the financial year of my holding or subsidiary or associate. I can make an application to NCLT, and if NCLT is satisfied, it will give me that permission to follow a different financial year. So the first understanding is that four documents are to be maintained. One is the books of accounts, the other relevant books and papers, financial statements, and all these documents with respect to a financial year, it should be maintained. Where should it be maintained? Obviously, it should be maintained only at the registered office. But it can be maintained outside the registered office also if it is decided by the board and it is intimated to the ROC in a form called as AOC 5 with a full address. I don't have space in my registered office, because you should be knowing by now, you should maintain the books of accounts for a period of at least 8 years. When you should maintain the books of accounts for a period of at least 8 years, I may not have sufficient space at my office to accommodate all these books of accounts, the documents, deeds, blah, blah, blah. But therefore, I can move the books of accounts outside the registered office also, but the decision is to be taken by the board and it should be intimated to the ROC. Some important points. Number one, you should maintain the books of accounts in accrual system and double entry system of bookkeeping, and it should give a true and fair view. So no choice for a company to follow cash system of accounting, no choice for a company to go for a single entry system of accounting. You should go for an accrual basis of accounting, and it should be as per the double entry system of bookkeeping. It should also give a true and fair view of the state of affairs of the company. It should also give a true and fair view of the state of affairs of the company. So to quickly run through what we have discussed now, my dear friends, we have discussed now what are all the documents to be maintained. The documents to be maintained are the books of accounts, other books and papers, financial statements, and everything should be maintained for a financial year. We know about the books of accounts. Books of accounts அப்படினால் the receipts and payments, the purchases and sales, assets and liabilities, and cost accounting records. Number two, the other books and papers means all the documents, deeds, writings, registers, minutes, etc. Financial year means 1st April to 31st of March. Newly incorporated company, date of incorporation till the 31st March of the next year. And you can follow a different financial year to comply with the financial year requirement of holding subsidiary or associate company outside India after no it is permitted by your ROC. After it is permitted by NCLT. The next point to be understood is that what is financial statements? Five things are financial statements: balance sheet, P&L, cash flow statement, statement of changes in equity, and the notes to accounts. Now, can the books of accounts be maintained in an electronic form? This is the next area. Yes, books of accounts can be maintained in electronic form, but at all times it should remain accessible in India, and it should be retained in the original format, and the information in electronic records shall remain unaltered. And there should be a proper system of storage, retrieval, printout, and it shall not be disposed of. And if it is outside India, no, the backup server should be in India. And you should intimate ROC at the time of filing financial statement. What is the name of the service provider, the IP address, location, etc. I expect a theory question in this area, my dear friends. Okay, this may be slightly boring for you, but this is a pakka theory probable question. I expect maybe a theory question will come. Can books of accounts be maintained in no electronic form? Explain the procedures with respect to maintaining books of accounts in electronic form. Right. Right. My dear friends, what about the branch books? What about the branch books? See, proper books of accounts should be maintained at the branch office, and summarized returns at periodical intervals can be sent to the registered office. So, for heaven's sake, please don't use the word called as head office and all. Use the word registered office. Head office is a very colloquial term which we are using. The term used under the law is only registered office. Head office is a very colloquial term which we are using. Okay, the head office அப்படிங்கிறது colloquial term. The term registered office is the proper term that shall be used. So with respect to the branch book shall be kept at the branch office, and proper summarized return should be sent to the registered office here in India. Then can the directors inspect the books of accounts? Yes. Whatever books of accounts are there in India, so they can inspect the books of accounts and other books and papers during the business hours. Prior notice is not required. இதெல்லாம் ரொம்ப very highlight areas. Okay, the director did not give a notice of his inspection, the secretary refused, the managing director refused, something of that sort they can ask. So please do understand. So please do understand. Prior notice is not required. A director, he need not give a prior notice. And if it is with respect to a foreign branch information, quarterly summarized returns they will send periodically to the registered office. Quarterly returns the foreign branch should send to the registered office. RO na registered office pa. And if a director wants to inspect something else, he shall send a written request for any other information, and that shall be provided within 15 days of the request. My dear friends, please do understand. Right. So with respect to the director's right to inspect the books of accounts, so all the books of accounts and other books and papers and they are available for inspection at the registered office or at any other place wherever it is during business hours in India. Whatever is there that is available for inspection. Outside India, whatever is there that is also available for inspection, provided he sends the notice to the company. So he sends a notice to the company saying that I want to inspect whatever records are there outside India. I want to inspect those things. Now the company should arrange and the company should bring those informations to India. And such financial information shall be sought only by the director personally and not through any power of attorney or agent. Which means the director cannot appoint an agent requesting for the books of accounts. And subsidiary or books can be inspected by any person who is authorized by the board of directors of the holding company. Subsidiaries books can be inspected by a person who is authorized by the board of directors of the holding company. So please do understand, can a director inspect the subsidiaries books of accounts? Yes, a director can inspect the subsidiaries books of accounts. Come on, can a director inspect the subsidiaries books of accounts? Yes, the director can inspect the subsidiaries books of accounts. But if a director wants to inspect the subsidiaries books of accounts, he should have been a person who is authorized by the board of directors of the holding company. He should have been a person who is authorized by the board of directors of the holding company. Right. Come on. So who has a right to inspect the books of accounts of the subsidiary company? The director, the board of directors of the holding company can authorize a person to go and inspect the books of accounts of the subsidiary company. Now, such a person who is authorized by the board of directors of the holding company can go and inspect the books of accounts of the subsidiary company. Then, so the essence in this director's right to inspect. So, who has got a right to inspect? The board of directors has got a right to inspect. What can they inspect? They can inspect all the books of accounts, the other books and papers, etc., which is available at the registered office of the company. Or if it is respect to foreign company, the foreign branch, whatever information the foreign branch is periodically sending to India, that they are having an access to inspect. Or no, any other information, if they want, they should give it in writing. Only they should give that in writing. Nobody else is permitted to give that in writing. Now the board will arrange for that information from outside India, then that will be handed over to the director in India. So this is the first segment. Period of maintenance. No, it should be maintained for 8 financial years immediately preceding the current financial year. The key word to be understood is that if company is in existence for less than 8 years, it shall be maintained for all the years. If the company is in existence for less than 8 years, then the books of accounts should be maintained for all the 8 years. Right. Ipo, my dear friends, where the central government had ordered for an investigation, then the central government can direct that the book shall be kept for such longer period. If the central government has ordered for an investigation, then no, the books of accounts can be maintained for such longer period as mentioned by the central government. Right. Who is the admin over there? Right. Ipo, who is the person who is in charge of all these things? Responsibility of maintaining the books of accounts. Again, this is a no area which I expect. Number one, the managing director or the whole time director in charge of finance. Please do understand, my dear friends. It is not just the managing whole time director. It is the managing director or the whole time director who is in charge of finance. Any whole time director is not responsible on this matter. It is a whole-time director who is no in charge of this matter. That whole-time director is the person who is responsible on this matter. Number two. Number two. Or the CFO of the company, no, that person also can be held responsible. The CFO of the company, that person also can be held responsible. CFO of the company, that person can also be held responsible. Friends, are you all following the discussion up till this, Abba? Everybody? Sorry. Now, the next point to be understood is that for all these contravention, there is a punishment, there is a penalty provision. So you can just go through the penalty provision. So there is a penalty provision. So how will they ask this in the examination? Na? They will ask that the books of accounts are not being maintained properly. Apart from the penalty provisions, the main trust will be something like as to whether the managing director is liable, the CFO is liable, this person is liable, that person is liable. This type of questions may be asked in the examination. About how should you be able to answer? You should be able to answer no. The managing director, blah blah blah, he is no, not responsible if there is any person who is authorized by the board in this behalf. Come on, if there is any person who is authorized by the board in this behalf, then obviously the managing director is not responsible. If there is any person who is authorized by the board in this behalf, then obviously the managing director is not responsible. Next, financial statements. Financial statements. At every annual general meeting, the board of directors shall lay the financial statements. At every AGM, the board of directors shall lay the financial statements. It shall give a true and fair view. It should comply with the accounting standards and it should be as per Schedule 3. At every annual general meeting, idella easy MCQ questions. The question may be whether the financial statement should be laid in GM, EGM, AGM, any of the above. Then obviously, what you will do is that you will go and write no any of the above, because MCQ nale we are so accustomed that we will use the word any of the above, all of the above, none of the above, either A and B. All these options we put it as a safe bet. But in the Mari area, you should be very careful. This is a matter which should be done exclusively at the AGM. Then consolidation. You should be knowing about this consolidation. What is consolidation? It is nothing but line by line addition of the financial statements is what you call as consolidation. Come on, repeat, what is consolidation? The line by line addition of the financial statements is what you call as consolidation. So this consolidated financial statement shall be prepared in addition to the standalone financial statements. The consolidated financial statement should be prepared apart from the standalone financial statements. You should also prepare consolidated financial statements. So if I may get a response from you, am I going fast? Right speed, no? Right, okay. So thanks for this cooperation, children. சொல்றேன்ப்பா தனியா சொல்றேன். Which companies are required to consolidate? So you should have a consolidated financial statements, and this is in addition to your standalone financial statements. This consolidated financial statement should be an add-on to your standalone financial statement. This should be in addition to your standalone financial statement. Which companies? The companies which is having a subsidiary or an associate or a joint venture. Suppose you have a subsidiary, but you don't have an associate or joint venture, you should do consolidation. Suppose you have a joint venture, you don't have a subsidiary or associate, you should do consolidation. Suppose you have an associate, you don't have subsidiary or joint venture, you should consolidate. Which means what is that you need to understand, my dear friends? If you can switch on the videos, I'll be more happy, my dear children. Sorry. So what is that you need to understand? That the point that you should understand is that just a minute. The point that you need to understand is that even presence of any one group company is sufficient. Even presence of any one group company is sufficient to mandate a consolidation. subsidiary இருந்தாலும் சரி, associate இருந்தாலும் சரி, joint venture இருந்தாலும் சரி, எது இருந்தாலும் சரி, consolidation will happen. Consolidation will happen. Friends, are you all following this discussion அப்பா? Right. Right. இப்போ super. How to do consolidation? The consolidated financial statement should be prepared in the same manner as how you prepare the standalone financial statements. In the same manner how you prepare the standalone financial statements, the consolidated financial statement should also be prepared. About with respect to standalone financial statements, my dear friends, for standalone financial statements, it will be sent to the board of directors for their approval. Then it will be sent to the auditor for his report thereon. Everything should be followed, even with respect to a consolidated financial statement. Even with respect to a consolidated financial statement. What is the procedure of consolidation? If you are required to consolidate as per the accounting standard, come on, possibility number one is that if you are required to consolidate as per the accounting standard, then you should do the consolidation as per the accounting standard as well as per schedule 3 part 3. But if it is a company which is not required to consolidate as per the accounting standard, then you are required to consolidate only as per schedule 3 part 3. But if you are an entity which is getting covered under accounting standards and you are required to do consolidation under accounting standards, now உனக்கு ரெண்டு consolidation. One consolidation is as per the accounting standards. The other consolidation is as per the schedule 3 part 3. That's a very simple format. Schedule 3 part 3 is that. Suppose if you do not get covered under accounting standards, still for you consolidation is there as per schedule 3 part 3. Still for you consolidation is there as per schedule 3 part 3. However, there is a relaxation with respect to the consolidation. When is there a relaxation with respect to the consolidation? Basically, do understand that the relaxation from consolidation is for the intermediate holding company. Basically, do understand that the relaxation for consolidation is with respect to an intermediate holding company. Let us also try to understand what is an intermediate holding company. Let us take, for example, my dear friends, through this illustration, I will demonstrate so that you can easily comprehend that. Let us say, for example, A Limited is there. We have B Limited. We have C Limited. Now, let us go very logically. A Limited holds 80% in B Limited. B Limited holds 80% in C Limited. Which means A Limited is a holding company. B Limited is a subsidiary company. Here, B Limited is a holding company and C Limited is a B Limited is a holding company and C Limited is a subsidiary company. And C Limited is a subsidiary company. Which means what should you understand, my dear friends? This fellow should also consolidate. This fellow should also consolidate. Why should he consolidate? Because he is having a subsidiary company. Why should he consolidate? Because he is having a subsidiary company. But let us be practical. When this fellow is consolidating, B Limited is consolidating the financials with the C Limited. Next step, B Limited as well as C Limited financial should be consolidated with A Limited because this is the ultimate holding company. This is the intermediate holding company. This is the ultimate holding company and this is the intermediate holding company. Above, there is a duplication in the consolidation. B Limited consolidates with C Limited. A Limited or the financial statements consolidated with B Limited as well as C Limited. But there is a duplication in the consolidation. Therefore, loss is. That no, if A Limited is consolidating, B Limited need not consolidate. If A Limited is consolidating, B Limited need not consolidate. This is the relaxation which is given under the law. But this relaxation is subject to some conditions. What are all the conditions subject to which this relaxation is there? Condition number one. About what is the conclusion? B Limited need not consolidate. Come on. If A Limited consolidates and files with ROC. If A Limited consolidates and it files with ROC. If A Limited consolidates and it files with ROC plus no objection is received. No objection is received from The 20 percentage minority shareholders. Now, if I use this word minority shareholders, you will understand. No objection is received from the 20 percentage minority shareholders. No objection is received from the 20 percentage minority shareholders. Whom do I refer to as minority shareholders here, my dear friends? Apart from the holding company, who else is holding the shares? That person is called as minority shareholder. Apart from the holding company, who else is holding the shares? That fellow is called as, come on, minority shareholder. Non-controlling interest or minority shareholding, we say that fellow is called as minority shareholder. But now what does the provision say? The holding company is the wholly owned subsidiary of any other company, or it is the partly owned subsidiary of any other company. So here we have given an example where B Limited is not a wholly owned subsidiary of A Limited, it is a partially owned subsidiary of A Limited. And all the other members were intimated in writing. The proof of such intimation is available with the company, and the other members did not raise an objection. For B Limited, there are two stakeholders. Who are the two stakeholders for B Limited? One is A Limited, the other 20% is the minority shareholders. If you have sent a notice to all the minority shareholders that you have not consolidated and they have not objected, B Limited should consolidate its financials with the C Limited, correct? If now when B Limited is sending a notice, and if this 20% minority shareholders has not questioned B Limited as to why has it not consolidated its financials with C Limited, then there is no problem. If A Limited alone consolidates, it is sufficient. So what is the essence of the discussion? The essence of the discussion is that if the ultimate holding company is going to consolidate, not only that it consolidates, it is filing the requisite forms with ROC here in India. It is filing the requisite forms with ROC here in India. So if the ultimate holding company is consolidating and if it is filing the requisite forms with ROC here in India, then the intermediate holding company need not consolidate. Friends, are you all following this particular discussion? Shall we progress? And this intermediate holding company should not be a listed entity. The next point is that this intermediate holding company should not be a listed entity. This should not be a listed entity. It is not listed either in India or it is not listed outside India. Then the ultimate or intermediate holding company of such company files the consolidated FS with ROC. So to give a development to this illustration, say for example, A Incorporation, B Limited, C Limited. So this is the main holding company. This is the intermediate holding company. This is the subsidiary company. So here he holds 80%. So imagine here he holds 80%. So A Incorporation is a company which is incorporated outside India. A Incorporation is a company which is incorporated outside India. An outside India company, incorporated company, is not required to file any documents with our Indian ROC. Indian ROC does not have jurisdiction. In this case, tell me whether B Limited should consolidate, or in this case, the Indian holding company should consolidate. Even though there is ultimate holding company, the ultimate holding company will not file any documents with our Indian ROC. Therefore, the law says that the intermediate holding company should consolidate. So here, whether consolidation is required or not, the answer is yes, consolidation is required. So here B Limited should consolidate, shall consolidate. Why should it consolidate? As A Incorporation is not required to file consolidated FS to ROC. In this case, whether consolidation is required in the B Limited example, whether consolidation is required, if all these conditions are satisfied, B Limited need not consolidate. Need not consolidate. Friends, are you all having clarity in this discussion? Everybody? Right. So this is the point which I just wanted to share with you. So I hope you will have a clarity on this area about when consolidation is required and when consolidation is not required. A long pending testing to be done from this particular area whether consolidation is required or not. So who knows? Now that we know, we can pray that this should come. What if only one shareholder gives an objection? Still, the no, you should go for a consolidation. Still, you should go for a consolidation. Right. இப்போ basically your financial statement should no, it should comply with the accounting standards. If your financial statement does not comply with the accounting standards, the following matters should be disclosed. What are all the matters that should be disclosed? That there is a deviation from the accounting standards, the reasons for the deviation, and the financial effect. What should you disclose? The fact that there is a deviation. Number two, the reasons for the deviation. Number three, the financial effect of such deviation. Everything should be disclosed. Where should it be disclosed? It should be disclosed in the accounting standards. And the central government also, by notification, it can exempt any class or classes of companies from the applicability of section 129, either conditionally, unconditionally, suo moto, or an application by the company, which means central government can say certain entities, you need not do consolidation. Certain entities, you need not follow schedule 3 formats. We already saw. Certain entities, you are given some exemption from the accounting standards. Everything lies in the hands of the central government. The central government is having power to decide on these matters. It can give relaxation. That relaxation can be conditional, or that relaxation can be unconditional. It can be on an application, or it can be suo moto, any of these conditions. If it is satisfied, the central government can give relaxation. Up till this clarity is there, shall we progress? Appa? Then, periodical financial statements. This is a new provision. So a good possibility that this can be tested in the examination. This is a new provision, this periodical financial statements. To whom is this applicable? So the central government may require the prescribed classes of unlisted companies to prepare the financial results of the company on periodical basis, obtain the approval of the board of directors, and complete the audit or limited review. Okay, at this time we need not know what is limited review. Please do know, memorize that there is something called as audit. Audit means fully you are examining. Limited review means where you are only making an or holistic analysis. Where you are making a limited analysis is what we call as, come on, limited review. File copy with ROC within 30 days of completion of the relevant period. So this is the power which is given to the central government, that the central government can notify any class of unlisted companies. Sir, a central government cannot notify listed companies. If you ask, listed companies are already doing this activity of filing the periodical financial statements because they are required to do so under the SEBI regulations. Because they are required to do so under the SEBI regulations. So listed companies, they are already doing this. Then reopening of the accounts, and then revision of the financial statements. These are two important areas, section 130 and section 131. What is this reopening of the accounts, and what is meant by the voluntary revision of the financial statements? Let me explain. Closely follow, my dear friends. See, reopening the financial books of accounts. What is meant by reopening the books of accounts means? What is meant by reopening the books of accounts means? You are opening the books of accounts, making so many changes in the books of accounts, preparing a fresh set of financial statements. This is what you call as commonly reopening the financial statements. Reopening the books of accounts and recasting the financial statements in சொல்லுவான். Reopening the books of accounts, now you are opening the books of accounts again. What is meant by reopening? Already the books of accounts has been closed. Already the financial statements has been prepared. Already the shareholders audit process is over. The shareholders approval has been obtained. Everything is done. But now for some reason we are again opening that books of accounts, we are making changes in the entries, and then we are preparing a new set of financial statements. This is called as reopening and recasting. This is called as reopening of the financial statements and reopening of the books of accounts and recasting the financial statements. There is something else called as revision of the financial statements. What is meant by revision of the financial statements? There is no problem in my books of accounts, but my financial statements has not complied with some disclosure requirements. My financial statements has not complied with some disclosure requirements. Schedule 3 requirements, my financial statements has not complied with. Or say for sorry, Schedule 3 requirements, my financial statements has not complied with. Or accounting standards requirements, my financial statements has not complied with. If this be the case, what can I do? I can no revise the financial statements. But there is no problem in my books of accounts. My books of accounts are intact. My books of accounts are proper, but there is some problem in the disclosure. Are you all following up? Right. So please do understand why are we having a session? No, this evening 7 to 9. Why are we having a session? There is a reason. I know you are back after a long day. I know you're back after a very long day. I do not know when your day commences, being the first day of the examination, whether the day started by 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock. Then, no, in a hectic travel, you went and you came back. And I was 200% confident that, no, by the time you reach home, you'll be so tired and therefore you will not read anything on your own. So, I wanted to make this time also productive. So that no நீயா தனியா இந்த நேரத்துல படிக்கணும்னு பார்த்தேன்னா you will be extremely tired. I can wholeheartedly empathize. So now if you attend the class, this becomes whatever topics are being covered here, it becomes a quick revision. And then from tomorrow morning, after the class is over, kana, then go to sleep. Early morning, wake up, then you can have or a fresh day. If I take this tomorrow, then the problem will come. Should you focus on what you planned to read, or should you focus on what I am revising here? So I decided to do it this way. Now when you are less productive, I will contribute to your productivity. That is the logic why we are having the session now. Okay, right. Ipo, so basically understand the difference between these two terms. Number one is called as reopening of the books of accounts. The other one is called as recasting the revision of the financial statements. So what is meant by reopening of the accounts, and what is meant by revision of financial statements? Reopening of the accounts, when does this provision come? Reopening of the accounts, where on an application which is made by the central government or the IT or the SEBI or any statutory authority to NCLT, the NCLT can order for reopening and recasting the financial statements. Before doing so, notice should be sent to all the statutory authorities and their representation shall be taken into consideration. So point number one, who will do this actual act of passing an order? The actual act of passing an order will be done by NCLT. So NCLT will only pass an order for reopening the books of accounts and for recasting the financial statements. But to NCLT, who will make an application? An application in this regard will be made either by the central government or by the IT authorities, IT na income tax authorities, or by SEBI or by any statutory authority. They can make an application to NCLT. Now the NCLT can order for either reopening the books of accounts. Reopening banale, obviously you should recast the financial statements. And before passing such an order, NCLT will give an opportunity to the statutory authority so that they can make a representation. Now, what is more important is the grounds which you should memorize. On what grounds can NCLT order for reopening of the accounts? Number one, the accounts were prepared fraudulently. The accounts were prepared in a fraudulent manner, or the affairs were mismanaged, casting a doubt on the reliability of the financial statements. Sir, the accounts were prepared fraudulently, sir. There was fraud with respect to the accounts, sir. Or the affairs of the company were being mismanaged. As a result, there is a doubt on the reliability of the financial statement. We are not very sure whether the financial statements were fraudulently prepared, but the person who were controlling the company by then, they are the persons on whom we have a doubt. There is the affairs were mismanaged during that period. Because the affairs were mismanaged, now we have a doubt whether the financial statements are also being prepared in a wrong manner. Therefore, the NCLT can order for reopening the books of accounts. When it reopens the books of accounts, then everything will start from the beginning. Fresher the books of accounts should be prepared. Fresher the audit should be conducted. Everything will happen through the NCLT. Then such order can be passed for a period of not less than 8 years. Unless the investigation is ordered by the central government, the accounts so revised and recasted shall be final. Summa, you cannot make an application to NCLT saying that, sir, please reopen. Summa, you cannot make an application to NCLT. Once this is done, that shall be final. Right. Next, voluntary revision. My dear friends, The main point that you should know, remember with respect to reopening and recasting is that what is the meaning? What is the meaning of reopening and recasting? The meaning of reopening and recasting is very simple, my dear friends. The meaning of reopening and recasting is very simple. What is that reopening and recasting? Reopening, now you open the books of accounts. You make so many no additions, deletions, substantial no modifications in the books of accounts. All those things you do. You make so many additions, deletions, and substantial modifications in the books of accounts. All those things you do. You again prepare a fresh set of financial statement, that is reopening and recasting. Only when the books of accounts were prepared in a fraudulent manner or the affairs were conducted, no affairs were mismanaged, casting a doubt on the reliability of the financial statements. Only under these two circumstances, what will happen? The NCLT will order for reopening the books of accounts, recasting. Revision is not a serious exercise like reopening. Revision is not a serious exercise like reopening. But what do we refer to as revision? What do we refer to as revision? By revision, we mean where you have not complied with some provisions of the law, where you have not complied with some provisions of the law. More importantly, the disclosure requirements. More importantly, the disclosure requirements. So you have not complied with the provisions of the law. More importantly, the disclosure requirements. But therefore, now you can make an application saying that, sir, please allow us to revise the financial statements. There is no substantial change in the books of accounts. There is no substantial change in all the entries and all. All entries, etc. is proper only, but some disclosures are not made properly. Therefore, you apply for a revision in the financial statement. So, what is the procedure here? The directors of the company may apply to NCLT for revision of the financial statements or board of directors report. The directors, they can apply to NCLT for revision of the financial statements or board of directors report. The NCLT may order for revision. Before doing so, the central government, the notice should be given to the central government, the IT authorities, and their representation shall be taken into consideration. When shall this happen? Only if NCLT is satisfied that it appears that the financial statements do not comply with 129 or the board's report do not comply with 134. Friends, do understand that there are two sections. One is called as section 129, which we discussed just now, that it should be as per the accounting standards in schedule 3 format and it should show a true and fair view. There is a section called as section 134 which speaks about board of directors report. Upon the board's report, what matters and all should be there, that is covered under section 134. Are you all following? So, where if the financial statements do not follow what is given under section 129 or the board of directors report do not comply with section 134, then under these circumstances, they can make an application to NCLT and NCLT can permit for a voluntary revision of the financial statements. Now, revision can happen only for a period not earlier than 3 years. Revision can be ordered only for a period not earlier than 3 years. My dear friends, unlike this thing, which thing? Unlike the reopening, which can happen up to a period of 8 years, revision can be done only for a period not earlier than 3 years. Revision only once. The year in which you are making a revision, in that board report, you should give a detailed reason for revision. So, say for example, we are in the year 2022. We are revising the financial statements. No question of voluntary reopening. We are in the year 2022. We want to revise the financial statements of 2019. So, when in 2022 you have made an application for revising the financial statements of 2019, 2022 board of directors report, you should mention the fact that you have revised 2019 order, that you have revised 2019 order what? That you have revised 2019 order board's report. That like that you should give it in 2022. Like that you should give it in 2022. Friends, are you all following this discussion up? Everybody? Right. Right. National Financial Reporting Authority. National Financial Reporting Authority. NAFRA. Who has got the power to constitute the NAFRA? Okay, NAFRA nale, it sends very scary, eerie feeling to all the charter accountants, but still what to do? This has come we should follow this. Act has come, we should follow what is there in the act. Seri. NAFRA, who shall constitute central government? NAFRA shall have one chairperson plus 15 full-time or part-time members will be there. They all should give a declaration that there is no conflict of interest or lack of independence, and they shall not be associated with any audit firm and related consultancy firms during and after 2 years of cessation of office. I expect a question may come in this area. So NAFRA, who will constitute NAFRA central government? NAFRA one chairperson will be there plus 15 full-time members and part-time members will be there. All these persons, they should not be associated with any audit firm or any related consultancy firms during and after 2 years of cessation of office. Now, what are the functions and powers of NAFRA? See, NAFRA, they will give recommendation to the central government on the accounting and auditing policies. They will monitor and enforce the compliance with the accounting standards and the standards on auditing and oversee the quality of the compliance professionals. Investigate into the professional misconduct of a CA or CA firm either suo moto or on the central government reference. Misconduct cases la penalty will be levied individual under 1 lakh to 5 times of the fees amount, firm under 5 lakhs to 10 times of the fees amount, and they will be debarred for minimum 6 months to 10 years for audit or valuation. So, what is the power of NAFRA? They will recommend to the central government on the accounting and auditing policies. They will place recommendations to the central government on accounting or auditing policies. And they will monitor and enforce the compliance with both the accounting standards as well as the standards on auditing. And they will also oversee what is the quality of the service being rendered by the professionals. And they can investigate into the professional misconduct of the CA or CA firm. Even no CA institute does not have this power. Once NAFRA comes into play, no, once NAFRA picks some CA firm and it says, I want to take an action against this firm, even CA institute does not have a say over that. Like this, no power is given to NAFRA. Now, over which companies NAFRA will exercise its power? Number one, NAFRA will exercise its powers over all the listed companies, either listed in India or listed outside India. And in the case of unlisted public companies having a paid up share capital of not less than rupees 500 crore, or an annual turnover of not less than 1000 crore, or outstanding loans, debentures, or deposits of not less than 500 crore as on 31st March of the preceding financial year. So, for these unlisted entities also NAFRA will be applicable. Insurance, banking, companies engaged in generation or supply of electricity, companies which is governed by a special act, for them also NAFRA will be applicable. And body corporate, which is relating to the group company, which is a subsidiary or associate of any company referred in A to C above, and the subsidiary or associate's income or net worth exceeds 20% of the consolidated income or net worth of the body corporate. Come on. NAFRA, over whom it shall apply its power. Over whom can NAFRA apply its power? Over all listed entities, NAFRA will have a power. Over all the listed entities, NAFRA will have a power. Number two, unlisted entities also 500,000, 500 of paid up capital, turnover, and outstanding loans, debentures, etc. NAFRA will have a power. Where the paid up capital of not less than 500 crore, turnover of not less than 1000 crore, and outstanding loans, debentures, deposits of not less than 500 crore, on them also NAFRA will have a power. Banking, insurance, electricity companies, over them also NAFRA will have a power. Group entities NAFRA will have a power only if that individual entity, if its contribution towards the total income or net worth is exceeding 20%. Holding companies covered under NAFRA. Subsidiary companies is automatically covered under NAFRA, depends. If that subsidiary company's net worth or income is exceeding 20% of the consolidated income. So I have one subsidiary company. So holding plus subsidiary gives me the total net worth of that entity. Holding turnover plus subsidiary turnover gives me the total turnover of the entity. If the subsidiary's contribution to the total net worth or the subsidiary's contribution to the total turnover, if it is going to exceed 20%, then with respect to that case, that subsidiary NAFRA will be applicable. Abdinal, with respect to the other subsidiaries, NAFRA will not be applicable even though the holding company is covered under NAFRA. Even though the holding company is covered under NAFRA. Then, sir, suppose I fall below the threshold limit. Even if you fall below the threshold limit, once NAFRA catches you, no, you will be subjected to a 3-year period in NAFRA. Once NAFRA catches you, you will be subjected to a 3-year period under NAFRA. So these are all the points which we need to understand with respect to NAFRA and accounting standards. So those entities, no, we are classifying these entities into two. Those entities which are required to follow Ind AS and those entities which are required to follow the normal AS. Those entities which are required to follow the Ind AS and those entities which are required to follow the normal AS. Right. So now with respect to no those listed entity ki, there is no relaxation at all. For listed entity, all the provisions of the act will be applied as it is. For listed entity, all the provisions, the full provisions of the act will be applicable as it is. So companies whose equity is listed or whose debt is listed, either it is listed in India or it is listed outside India. Listed India or it is outside India or it is in the process of getting listing, or if it is going to be an unlisted company which is having a net worth of greater than or equal to 250 crores, or the group, which means the holding subsidiary or associate, which means the holding subsidiary or associate. And the group above one, for one person, if the provisions related to Ind AS is applicable, then for everyone in that group, the provisions related to Ind AS will be applicable. If for one person, the provisions of Ind AS is applicable, then for everyone in that group, the provisions of Ind AS will be applicable. And then with respect to the accounting standards, the normal accounting standards for all the companies, accounting standard is applicable other than the Ind AS companies. So you at the intermediate level, you are reading the accounting standards now. At final level, you will be reading only the Ind AS. Final accounts, nothing else is there. Only one chapter is there. That chapter is Ind AS. All the Ind AS provisions will be there. So, anyways, authentication of the financial statements. So, with respect to the authentication of the financial statements, number one, the financial statement should be approved by the board of directors. Number one, the financial statement should be approved by the board of directors. Number two, the financial statement shall be signed on behalf of the board of directors by the chairperson if he is authorized, or by two directors of the company, including the managing director, plus by CEO, CFO, and CS, which means either the board should sign. Board means what? All directors should sign. All directors should sign. This is option number one. Or it should be signed by the chairperson alone. Or it should be signed by two directors. Plus it should be signed by the CEO, CFO, CS. Upon every financial statements, no, minimum 4 signatures will be there. What is the signature? Minimum 4 signatures that will be there. CEO signature will be there mandatorily. CFO signature will be there mandatorily. CS signature will be there mandatorily. Plus, it should be signed by chairperson. Chairperson of the board. Hey, we are speaking only from the company's perspective, Danapa. Financial statements are prepared by the company, Dana. Auditor signature is a later discussion. Now, financial statements is signed by whom? It is signed by the on behalf of the company by the chairperson if he is authorized by the board, or it is signed by two directors of the company, out of which one person is a managing director, and it is signed by CEO, CFO, CS. Mandatory for CEO, CF, and CS to sign. In the case of one person company, needless to say, one director if he signs, it is sufficient. So once you sign this financial statements, next step of what should be done? This financial statement should be sent to the auditors for their report thereon. This financial statement, no, it should be sent to the auditor for their report thereon. CS irunda CS pa. If CS is applicable for that entity, then CS. So it should be sent to the auditors for the report, and the audit report, board of directors report, everything should be attached to the financial statements. The audit report, board of directors report, everything shall be attached to the financial statements. So this is with respect to section 134. This is with respect to section 134. With respect to section 136, section 136 speaks about circulation of financial statements. 135, no, I will discuss 135 later. Corporate social responsibility, that I will discuss later. 136 is circulation of financial statements. What should be circulated and to whom it shall be circulated? The audited financial statement shall be circulated with all the attachments, including the consolidated financial statements, and it should be sent to whom? It should be sent to every member, the debenture trustee, and any other person who is entitled to receive. So, audited financial statement should be, along with all the attachments, including the consolidated financial statement, should be sent to all the members. It should be sent to the director, debenture trustee. It should be sent to any other person entitled. When should it be sent? It should be sent at least 21 days before the meeting. It should be sent at least 21 days before the meeting. Less than 21 days notice possible, Anna? Yes, less than 21 days notice possible if section 101 EGM conditions are satisfied, which means in section 101 he will tell when can you send less than 25, when can you send less than 21 days notice. EGM notice provisions he will tell. Majority number holding 95% in value, one provision will be there. But if you are going to send the financial statements less than 21 days before the meeting, then it is still possible, provided you comply the conditions which are prescribed under EGM. Provided you comply with the conditions which are prescribed under EGM. And how should you circulate the financial statement? Should it be in physical mode? Should it be sent it in electronic mode? How should I do it? Listed companies and public companies with a net worth of greater than 1 crore and turnover of greater than 10 crore. This is an area which you may miss. Listed companies and public companies which is having a net worth of greater than 1 crore and turnover of greater than 10 crore. ஆர் இல்ல பொதுவா இதுக்கு முன்னாடி பார்த்த எல்லா கண்டிஷன்ஸும் நெட்வொர்த் பேஸ்டா இல்ல டர்ன் ஓவர் பேஸ்டா ஆர் தான் we discussed. Yes or not? Where if the no paid up capital of 500 crore or more, net worth turnover of 1000 crore or more, outstanding borrowings to the extent of 500 crore or more than 500, இந்த மாதிரி தான் we discussed. But here he is telling both the net worth as well as the turnover. No, if it is exceeding 1 crore and 10 crore respectively, they can send it by electronic mode to the demat shareholders. Who listed entities by electronic mode they can send to the demat shareholders. Public companies which is having a net worth of greater than 1 crore and turnover of greater than 10 crore, they can also send it by electronic mode to the demat holders who have consented for it. For others, it should be sent only in the physical mode. For others, it should be sent only in the physical mode. Then next concept is abridged financial statements. See, examination you should not use the word abridged financial statements, though I use it for convenience here. Examination you will not use the word abridged financial statements. Examination enna vaartha you should use abdinal a statement containing the salient features of the financial statements. A statement containing the salient features of the financial statements, that is the word that should be used in the examination. Statement which is containing the salient features of the financial statements, that is the relevant term that should be used in the examination. What is meant by a statement which is containing the salient features of the financial statements? It is not the full set of financial statements. அது ஒரு consolidated or consolidated சொன்னா you will misunderstand. That is an abridged version of the financial statements. That is the abridged version of the financial statements. My dear friends, with respect to a listed entity, no, the volume will be extremely high. More when the volume is extremely more, it is becoming extremely difficult for that entity to prepare the 300-page documents and to send it to the shareholders. Therefore, what law is telling, prepare the 300-400-page financial statements. From there you prepare an abridged financial statements, which means it will not have as much details as what is there in the main financial statements, but key informations will be there. Balance sheet first page will be there, some important schedules will be there, some important notes will be there. This is both an advantage to the company as well as to the member also. If you give a 300-page document to the member and if you ask him this is the financial statements, he does not know what to look into and what not to look into. And law facilitates. How is the law facilitating? You should send an abridged financial statement. You should send an abridged financial statement. This concept is applicable only with respect to listed entity. This concept is applicable only with respect to listed entity. So the abridged financial statements, which means a statement which is containing all the salient features of financial statement, that should be sent to the ROC. That should be sent to every member and also to the company as well as to the debenture trustee. To these persons it should be sent. Now, every company shall place audited accounts of the subsidiary in the website, and it should also provide a copy to the shareholders on demand. So audited website, say audited financial statement should be placed in the website. Whose audited financial statement? Subsidiary or audited financial statement should be placed in your website. See, what and all I will provide pa? I will provide my standalone financial statements. Plus I will provide the consolidated financial statements. This too you are having clarity, yeah? In addition to this, I need not send, but I will post it in my website. What I will post it in my website? My subsidiaries audited financial statements, I will post it in the website. My subsidiaries audited financial statements, I will post it in the website. And I will provide a copy to the shareholders on demand. If any shareholder says, I want to have a copy of the subsidiaries accounts, you should provide him on demand. But until then, if you just post it in the website, it is sufficient. The next provision says the unaudited accounts of the foreign subsidiaries. Sir, my subsidiary is a foreign subsidiary. Under foreign law, they are not required to get their books of accounts audited. Sir, my subsidiary is a dash subsidiary. It is a foreign subsidiary, and under foreign law, they are not required to get the books of accounts audited. Now, if under the foreign law they are not required to get the books of accounts audited, no problem. Now you can place the unaudited accounts into the website. But to the extent it should be in possible, it should be in schedule 3 format. To the extent it should be no, to the extent possible, it should be in schedule 3 format. It should be in schedule 3 format. Right. Next is the provisions relating to section 137. Section 137 speaks about the time limit for filing the financial statements. Very, very important area. What is the time limit for filing the financial statements? Two possibilities: where the AGM is held, where the AGM is not held. AGM is held, na, again two possibilities: the accounts are adopted, the accounts are not adopted. Come on, AGM is held, AGM is not held. AGM is held, na, then again two possibilities: the accounts are adopted, the accounts are not adopted. If the accounts are adopted, then the adopted account should be filed within 30 days of the AGM. With whom it should be filed? It should be filed with ROC. No, sir, my accounts are not adopted, then you will file the unadopted financial statements within 30 days of the AGM. As provisional financial statements, you should file it with ROC. Unadopted financial statement as provisional financial statements, you will file it with ROC. Then once it is actually adopted, then you will file the adopted financial statements within 30 days of adoption. You will file it with ROC. Sir, AGMA not held. Still, you will file the financial statements, the unplaced financial statements, which is not placed before the shareholders. Still, you will file that along with the reason as to why no, you have not AGM is not held. So, you should file the financial statements within 30 days of the last date within which the AGM should have been held as per the law, along with reasons for not holding AGM, my dear friends. There is a date within which the AGM should be held. Section 96, there is a provision. And the section 96 provision, there is a date within which the AGM should be held. It is given there. Yes or not? Now you should file the financial statements. No, from that date, within 30 days, you should file. AGM is not held. You are supposed to have held the AGM. AGM is not held. Okay. Because your AGM is getting delayed, don't delay the financial statements filing. Because your AGM is getting delayed, don't delay the financial statements filing. Still file whatever financial statements are there. File it with the ROC within 30 days of the last date on which AGM should have been held as per section 96. There is a section called as section 96. Otherwise, you would have studied. In each calendar year, one AGM should be held. Time gap between two AGM should not cross 15 months. From the end of the financial year, the AGM should be held within a period of 6 months. Extension possible, but that extension should not exceed a period of 3 months. Yes? We have studied this. Special provisions. What are these special provisions? In the case of OPC, you should file the financial statements which is duly adopted by the member within 180 days of the closure of the financial year. OPC ki, there is no concept called as annual general meeting. Other entities you can say AGM lane within this time limit you should file. OPC ki, there is no concept called as annual general meeting. So therefore, with respect to OPC, the financial statement should be filed within 180 days of the closure of the financial year. Which means No, basically, if we see, other entities will have roughly around, no, chuma kuttu madipa, if I should say, the other entities will have roughly around 210 days. Why they will have 210 days? Because the last date for holding AGM is generally 6 months from the end of the financial year. 6 months from the end of the financial year, AGM should be held. Adelaide within 3 months, see, Adelaide within 30 days, you should file the financial statements, correct? But rough 6 months, if you apply it as 30 days, nalo, then it is 180 days. Plus, within that 30 days, you should file. Now, rough around 210 days will come. But for OPC, the time limit is only 180 days from the closure of the financial year. This is just for an understanding purpose. Okay, don't write all these things in the examination. Examination will be 210 days in that will not fetch you marks in the examination. Okay, are you all following? Sorry. In the case of the companies which is having subsidiary, a company which is having a foreign subsidiary not having its place of business in India must file the standalone financial statements of the foreign subsidiary also along with its no financial statements. But if I am having a foreign subsidiary, apart from my no financial statements, I should file the standalone financial statements of even my foreign subsidiary. I should file the standalone financial statements of my foreign subsidiary. So these are all the points. XBRL, what is XBRL? You all know, extensible business reporting language. So this is applicable to which entity? This is applicable to the entities which are listed in Indian Stock Exchange and its subsidiaries. Are companies which is having a paid up capital of greater than or equal to 5 crore or turnover of greater than or equal to 100 crore, for them the provisions relating to XBRL shall be applicable. Non-applicability, banking, insurance, power, NBFC, housing finance, to them no, XBRL will not be applicable. Are not applicable. These are things which you should memorize. Things which you should memorize. Right? Right. So my dear friends, no, I'm running an extreme no a poor sore throat. I could sense my no throat bleeding inside. So I will not be able to continue any further, but I am not going to let you go as it is. What I have done is that for the previous batch, I have taken note like this a quick revision. I have taken for Indian Contract Act. I have taken for Negotiable Instruments Act. I have taken for deposits. I have taken for accounts. I have taken audit. I have taken share capital. I think I have also taken meetings. So everything is available with us. So what I'm planning to do is that right away, once this class is getting over, I will now ask them to upload everything in the YouTube. So you can go to no SmartLearn YouTube channel, and I'll ask them to create a playlist, quick revision or no CA inter revision May 2022 examination. It's already available. Sorry. You can go and you can no listen the balance lectures there. I didn't see this coming, so no, it's a no very a pathetic development which I have developed since yesterday evening. I thought I will recover, but no, it is not happening. Right? So my no best wishes to you all. Do things no extremely well, and whatever these quick revision notes are available, all the notes I'll ask them to upload it in the portal. All the notes I'll ask them to upload it in the portal. Okay, so you need not worry. Everything will be available in the portal, and the lectures you can see it from the no the YouTube. எல்லா என்னென்ன lecturesல இந்த மாதிரி quick revision என்ன lectures இருக்கோ எல்லா lecturesையும் unconditional I will no make it available for you in the YouTube. It will be available till no day after tomorrow evening 5 o'clock. It will be available. அதுக்கப்புறம் it is irrelevant for you. Correct appa? After that you are no CA final students with respect to law. You are no more CA intermediate students. After that it is irrelevant for you, so that you can view it from the website, the YouTube. Okay, so I didn't see this coming, my dear friends. I know took some no the medicines, but it is not working immediately. So my heart is all there with you people. So I have no received some real good responses today with respect to the first examination. So continue with the flow. Okay, so there could be two set of students or three set of students. Number one, sir, I did well. Fair. Forget that, go to the next subject. Sir, I did okay, but I am not sure whether I will get through 40 or 42 or 39 examiner or a hand slide is there, sir. Fine, forget it, go to the next examination. Sir, very sure, sir. I have not done properly, sir. I have not done as per that no expectation, sir. It is very hurting, sir. Forget that. Proceed to the examination. What has happened has happened. Nothing that you and I can do with respect to the first examination. Don't become so complacent if you have scored well or if you have done well in the first examination. Don't be too let down if you have not done well in the first examination. Ignore that, focus on the second examination. Who knows, luck be your side, no, God be your side, your efforts are recognized, you can score a good exemption in subject number 2, 3, 4. That will help, no, a 40 in group, no, the first subject, or maybe a 16 first subject. So forget, no, what has happened. So this is my very sincere advice to you, my dear children. So please, no, at least for a quick glance, whatever I have done with respect to this, no, Indian Contract Act, Negotiable Instruments Act, deposits, then no share capital, meetings, whatever is there. Okay, just run through those. Okay, so my heart is with you all. I am praying, no, very sincerely. I'm praying God that no, whatever you study should have come in the examination. Whatever you study, you should not forget that in the examination, and you should have a peace of mind in the examination so that no, you can crack the examination beautifully. Don't get tensed, stay cool. Okay, then 50 percentage of the success is when you stay cool, because all the preparatory part is already over. Now what is done properly by way of preparation can be spoiled by way of no this urge or this tension, pressure. இதெல்லாம் this should be alien words to you. Sir, ஒரே டென்ஷனா இருக்கு சார், ஒரே ப்ரெஷரா இருக்கு சார், ஒரே சுகரா இருக்கு சார், இதெல்லாம் நம்ம என்ன கழ போல்ட்டா? இதெல்லாம் we should know, it should stay alien to us. You should focus only on I have studied, I know, என்ன படிக்காத என்ன கேட்டுற போறான் அப்படின்னு you should go and you should crack the examination. Right? Everybody? Right. Bye, child. Bye, children. Bye. Please do watch it from the website, the YouTube channel, right?